free live day trading lesson, we're going to be talking about a couple of trades that I took, but also we're going to talk a little bit about inside ranges, although technically it wasn't an inside day. It was very close. We're going to talk about how we trade within moving averages. There is all sorts of stuff we're going to be covering in this. So give me a sec. We are going to go into the charts. As I'm going into the charts, I just want to remind you, these are free. So as for a little bit of payment, all I ask is for a like. And if you have watched these at least a second time, first time's free, second time, got to subscribe. It's not much to ask for. Let's do this. So what we're looking for here, or what we were looking for, is to not have a bias. So what happens? Okay, so let me give you a little bit of a backstory as to market psychology after a big red day like we had yesterday. So what happens is you have a bunch of traders, retail traders, that miss that short. They then look at the daily chart. They see that huge red day. And then what happens? They're like, I missed it. I'm going to jump in short. And that's this morning. So they're going to jump in short. The majority of retail traders out there are just going to have that immediate bias. They're not necessarily going to be trading the chart and what the chart tells you. It's an immediate bias. That is a big, big fucking mistake. And what happens is the market will hold, and the only way that it sells off further, and I said this morning that I find it highly unlikely that we're going to have a continuation play, which we didn't. Sure, it closed a little bit lower than the previous day's lows, but in a very minor fashion, especially for the type of action that we had yesterday. And the reason for that is there are a ton of retail shorts. And I know I keep repeating that. Just hang tight and I'll explain. So if you take a look up here, when they develop these ranges, you see how it holds, pushes up, holds, pushes up, holds, pushes up, and it's putting in the technical lower highs, lower high, lower high, lower high. Well, what happens there is you're having areas for retail traders to get in short. And once it breaks those lows, every time it broke lows, it wanted to snap back up. Now, it might not have snapped back up at every time it broke a new low, but it wanted to. And that's because retail traders aren't necessarily trading towards a bigger picture play or a target. They're mainly day trading. And they trade their P&L. So instead of trading to a solid target, what they'll do is they'll just pay themselves because it's coming down and they're making money, which isn't necessarily a bad thing. It's about locking in that profit. I get that. But that's why this market wasn't destined to completely sell off today. I know there's a lot of people that look at this sort of stuff, and when they miss those big red days, they want to jump in short because they missed yesterday. They weren't prepared, right? They didn't know how to read the language of the chart. So they didn't understand that yesterday was the recipe for a big, big day. There's a reason why I held to the end of the day, full size. Okay. So that's what happens. That's how you get these inside days after a big day. And I understand technically it's not an inside day. It did put in a lower low, but pretty much it's a small day comparatively to the previous day's action. And that's why day trading on a whole different level comes down to understanding. Okay. Understanding why markets do what they do. There's a lot of people out there that still have this notion that the stock market is random and it's chaotic and there is no way to tell what is going to happen. Now, I'm not saying you're able to tell with 100% certainty. That word, 100%, that's a big deal. Okay. There's always room for variables and changes, right? But ultimately, there is. It's not as difficult as people make it out to be. And I'm not saying day trading is easy, but what I'm saying is understanding the market, because the market tells you what it's going to do. If you take a look and you know even a little bit about the human condition, human nature, the human condition, what makes people tick, why people do what they do, all this chart is a direct representation of human emotion put to a computer screen, basically. That's all this is. It's a representation of emotion. When you understand that, and you understand who your opponent is, right? Who you are up against. Well, we are up against other retail traders number one. And number two, institutional traders. Okay. So when you understand that, what makes those two groups do what they do, this becomes very easy. Sorry, my dogs are about to go ballistic because the wife is taken off to go grab some dinner. So you'll have to deal with it. But anyways, that's why we didn't have that big sell off today. Everybody thought it was going to, right? Every time they see that big red day, that's what people fucking think. They think it's going to continue selling off and it's going to be another big day. So I got to go in short. And that's why I took one long and one short as per strategy. On Qs, let's go to Qs here. So Qs we took long. Market opened up, it was kind of holding, and then it bailed into the 20 SMA. Now this level I kind of put up afterwards because we were watching the daily chart for our execution. This was more for a head bump opportunity right here, which you could short it down into this level, which we got. It worked perfectly. But on this here, the very first trade was a beautiful, beautiful trade long coming down into that 20 SMA. Started in as it's coming into it. That's my first entry. Secondary entry right at lows. Worked it all the way back up. So from lows to highs, beautiful trade on that. So locking in $2,960 on the long. And that right there, there are so many traders that would have had the ultimate bias of, I am only going to go short. Why? The market is telling you it's in between a range. So what should have happened, where the odds, I shouldn't say should have happened, but where the odds are on this, it will come into the 20 SMA right here and bounce into the 9 and the 5. It will want to test that. Now, the market either obviously had other ideas, but that's where the odds would be. That should be your greedy target on that long, because we will trade within ranges. It will want to test support and then it will want to test resistance. Straight up. That's technical analysis 101, ladies and gents. It's easy peasy shit, man. You just have to, you have to trust it, right? Like if you're going to be a technical trader, then be a fucking technical trader and trust what you're doing. So that's the long. So like I said, locking in $2,960 on that long. Beautiful trade. Now, on the short. So on the short here, right into about 10 o'clock on those entries was right in here. Now, what we wanted is before we went short, the only other short available was if it made a run up to this level. Okay. It didn't do that. Okay. It came above pre-market highs. And I said, if it wants to do that, perfect. It's going to set up for us. So what then happened, and what we were waiting for, was a failure. We wanted it to fail this 50 SMA on the daily. We don't want to take this one long. We've already taken Qs long. Now we're looking for the short. So we're not looking to short it upon the break of the 50. That's retarded. That's really dumb money bullshit tactics. If you're shorting on a break, shorting breakdowns, you're a fucking moron. Stop doing it, please. For the fucking love of God, stop doing that. Wait for a proper entry. And the proper entry on this was the break and then the rebound back up here to come up and bump its head into the 50. And that's what it did. And that's why you will constantly see when you're watching these, if you've watched these over and over again, you're going to see my entries, or they're beautiful because I'm waiting for proper entries. It's not like it's luck or anything like that. It is timing. You have to know when to strike, and you strike at proper technical entries. It's no magic going on here, guys. So shorted this, paid myself, got out, easy peasy. And because of the high odds of success type of trade and the confidence level on this trade, I can then apply pressure. Pressure meaning size. On this little itty bitty move, I'm still locking in $7,645 in what? Less than 10 fucking minutes? Because you're waiting for the right move, the right setup. It is about timing. And when you get your timing correct and you're waiting for these things to set up as per strategy, you can then apply pressure, meaning size. And that's the secret to success, guys, as a day trader. What I see out there all over fucking YouTube and X and every other social media platform are day traders that are gamblers. if you are not a gambler and you want to actually do this for a brand new career path, you're looking for a change in life, and you've chosen to try day trading. Number one, we don't try, we fucking do. And if that's the case, you just stumbled on an absolute gold mine finding this channel and finding me. Not to sound like a jerk off, but it is what it is, man. So come to tricktrades.com, come get properly educated, and learn how to make the market your fucking bitch. Straight up. Have a good evening, folks. Adios.